as Sam was saying, it is a bit of a mixed bag. The consumption strength, some of that may be related to the Double 11 Singles Day, because we are seeing sequentially there was a pickup, and the Double 11, even though it was in November, but it started in late October. So it remains to be seen whether this is a sustainable recovery in the consumption front or this is a one-off. But the weakness in the property sector and also for investment outside of a property may be telling us all the headwinds in the property sector and local government financing vehicles, they are still strong, and policymakers cannot relax. If they want a decent growth number next year, more work needs to be done.
When you say they can't relax, Hui Shan, and that more work needs to be done, as I mentioned, it does very much look like the consensus growing in the market is around these concerns to do with the more sort of medium to long-term structural challenges within the economy when it comes to those 3 Ds. So do you think that 2024, the year of the dragon, will be sort of the defining year in terms of the government actually addressing some of these challenges?
Potentially. I think you touched upon a very important aspect of the Chinese economy, which is right now in many parts of the economy, we have a sort of self-fulfilling negative loop that's ongoing. Think about property. If prices are falling as a consumer, it's probably not the best time to buy. I want to wait until prices bottom to buy property. And if that happens, then the property price may decline further. So there is a self-fulfilling negative feedback loop at work. And how do we get out of that? That's where we really need government policy, whether provide a clear roadmap. How do we manage the property sector? How do we manage the growth slowdown or your expanding central government balance sheet to concretely show the market that this is how we're going to address these issues? That will get us out of that negative feedback loop, because otherwise it can keep going and become slow growth becomes a slower growth. And I think that's something the policymakers would not want to see.
Hui Shan, how much stress do you think we will continue to see in the property market amongst the property developers, or have we seen the worst of it, and can we expect to see an orderly default cycle, or is this going to get messy?
It's important to recognize that right now the property sector has 2 parts. If we're talking about the old model, the developer buying land and pre-sales and the sort of the commodity housing we're used to for the past 20 years, I don't think much has changed, and there's still a lot negative news to come out, because if you think about starts are down 60%. Right? But the total new homes under construction is only down 13%. At some point, the total new home under construction should be consistent with the new starts, and that should be a lot lower than where it is now. So that's something I think there's still more deceleration or decline to come. But there's also this new part of a property sector the government is trying to leverage to smooth that slowdown. This is where public housing, urban village renovation, and the 1 trillion reported PSL the central government may provide. That's where that support is coming in. So I think that we have to separate the 2 parts. If you think about the old model and the private developers, I don't think we're out of the woods.